Welcome to another video. Today I want to talk about positions I'm currently in, what I'm looking at, and why. I want to spend a small segment talking about why most of the times I am on the right side of the market. So if the markets are going up, I'm usually in a buy, and if the markets are going down, I'm usually in a sell. And I tend to catch reversals a lot, and I will talk about that in the second half of the video. So with that being said, let's talk about my position. So I'm currently in two positions. What is happening with gold? Gold is now down 0.32%. That's interesting. I need to look at some news, what's happening at the moment. So we have no new news. So yeah, I guess that tends to happen in gold, but yeah, we're seeing a bit of selling in gold at the moment. This is a long that I'm in, and I'm also in a short on USD CAD. So I want to talk about my idea behind USD CAD. So I mentioned this yesterday, but it was just all the signs that I was getting of investors wanting to sell the dollar, and we can see that the dollar is it's down today. We recently got retail sales, which actually came in slightly worse than expected. So the expectation was minus 0.1, and we got minus 0.9. So that came in worse than it expected. And the control group was a similar story. The previous was 0.8, and the number that came in was minus 0.8. So this is not good for the dollar, right? So that's the data we received this morning, and we're seeing some weakness in the dollar. I'm actually monitoring this position to see if I should close it today, because with so much volatility in the markets, I really don't want to enter the weekend with a short on USD, because Trump could just say something and we open with a huge gap and all of my profits are gone. So I don't really want to go into the weekend with this position. And the dollar, this support level right here, I'm looking to see if we get a strong close below it. So if we get a strong close below somewhere, maybe here, I'll probably hold my position into the weekend, but I really don't want to hold that position. So that's my idea on the US Canadian dollar. I showed my entry up here yesterday on the channel, and now we're in some profits. What I have next, my GJ, which I actually close this position. So this right here, there's no active position at the moment. I actually close this position, and the reason why I close this position is for a few reasons. Well, for one, I actually initially risk a bit too much on this trade. So I risk 1.5% of my account on this trade, which for many people that may not be a lot, but for me that's a decent chunk of my account. I only usually risk that much whenever I'm in a trade that I'm really confident in. So if I'm in a trade that I'm really confident will go my way, I'll risk about 1.5%. And this setup right here, it was actually a B setup. So I have B plus and A plus. So I should not have risked that much on this trade. So that's one of the reasons why I actually closed this trade. And I closed it for a loss, by the way, somewhere here. So I closed it for about a 0.5% of my account loss. So I actually closed this trade. The other reason is I'm starting to see a shift in a risk on environment. So we saw the Nasdaq with a strong 1% close yesterday. We saw 10-year yields going down, and it's still going down. Now this is a bit sometimes good for the yen, but if we shift to a risk on environment, historically the yen is seen as a safe haven currency, even though recently we have started to see some changes. But if we look at the yen here, so this is the correlation between the yen and this is the Nasdaq. We can see that most of the times it's inversely correlated. So whenever the Nasdaq is going up, the yen is going down, even though recently that has not really been much of the case. But that's one of the reasons why I close this my short on GJ. And the other reason was I'm starting to see some strength in the pound. So if you know, I was outright bearish on the pound. Now I'm neutral, so I'm neither bullish nor bearish on the pound, and there's a few reasons for that. The first of which was a strong GDP number. Well, not really strong, the better than expected GDP number that we received yesterday. So GDP quarter over quarter and year over year came in better than expected, and we also had some other data that basically all came in better than expected. And then add to that, sure, we had bad inflation number, we had a dovish BOE. The labor market data was a bit mixed, but if you look at productivity at the moment, most of the productivity metrics came in better than expected. So productivity in the UK at the moment, it's building a bit, and that may lead to some strength in the pound. And additionally, we also have what's happening between Russia and Ukraine, which there's a sentiment or chatter in the ear that Trump may end the war in Ukraine, and that supports the euro. And if you understand correlation, you know that the euro and the pound is highly correlated. So if the euro gets strength, this could also strengthen the pound. So all of those factors combined with the amount that I was risking on this trade, it actually led me to close this position for a small loss. Now, if I had risked 1% on this trade, or 0.8%, 0.7%, which I normally risk on a B setup, I would have still been in this trade at the moment. But as I said, I just risked a bit too much, and I was just not comfortable being in a trade that I was risking 1.5%, where I wasn't really confident. So that's why I closed this trade. If we actually get something like this, obviously I'd be annoyed, but I'd just be looking for re-entries. If we get something like this, I won't take any FOMO sell or anything like that. So that's kind of why I close this trade here. Next position I'm in is gold, which as we've seen just now, gold was actually up on the day. So seeing it down, this happens with gold sometimes. Look at this red candle right here. Boom. This probably happened within like 2 minutes, or it happened about 5 minutes. So this happens sometimes with gold, like just massive selling for I don't know what reason. So you usually see this a lot in gold, but I'm a swing trader, so I don't really pay much attention to those intraday price action. But I mean, that was probably 30%, 40% sell off that we just saw there. So I'll be watching this gold position. I have 2 positions open. I'll probably keep one stop loss on open and move my other stop to break even. So that's my long on gold, and I explained that I'm expecting dollar weakness, a lot of uncertainty at the moment, and momentum. So gold has a lot of momentum at the moment. So that's kind of my idea for my gold long here. So I'm looking to hold this long. And that's basically the only positions that I'm in. I think I spoke about this position already. Yeah, so that's really the only position I'm in at the moment. A long on gold and a short on USD CAD. I wish I had taken this short, but because I was already short GJ, I didn't want to short the UJ as well, because I do not like to be overexposed on one currency. So that's why I did not take that short here. But as you can see, we came back and retested this trend line basically to the tick, and then started selling. This would have been a solid entry, but I was already short GJ, so I never went short this, but this would have been a great entry. I'm continuing to eye UJ because, as I said, a short on this is just not really attractive to me again. The next currency that I'm actually watching is the Australian dollar, which has been showing a lot of strength. Now, I don't follow the Australian economy a lot. If you look into where I track economies here, I track the US, Japan, UK, Canada, and these all have economic data So if you go into the US, we have labor market, inflation, productivity. I'm following up US news. It's the same for Japan, UK, Canada. I'm very in tune with these economies. But if you look at Australia, it's blank. So I've only recently started to trade the Aussie dollar. So I'm not really in tune with the Aussie dollar. So I cannot really tell you why it's gaining a lot of strength. I know that the Australian dollar, similar to the New Zealand dollar, is a currency that they usually move well in risk on environment, similar to the pound, because the yen and the dollar lose its value in risk on environment. So things like the Aussie dollar, the pound, and even the Canadian dollar, sometimes they usually gain strength in those type of environments. So that could be leading to the strength that we're seeing in the Aussie dollar. But I was contemplating a long on Aussie dollar instead of a short on USD CAD, but I mean, they're both working out the same at the moment. And as I said, I'm not really in tune with the Australian economy, so I didn't really take any position on this. But over the weekend, I'll be doing some research and some reading on the Australian economy, so I can start trading the Aussie dollar and also the Aussie yen. Now, with that being said, most of the times I want to talk about my positioning and why most of the times I'm on the right side of the market. And this does not mean that I am right about the direction, not the direction. I have like a 90% win rate in trading or anything like that. I actually have a pretty normal win rate, which is about 56% or something like that. I have 56% win rate on one account and 60% win rate on another account. So I actually have a pretty normal win rate, because as a trader, you're really trying to time the market. So a lot of times I am right about the direction, but I just get stopped out, because as a retail trader who trades CFDs, you're really trying to time the market. So most of the times I'm on the right side of the market. I catch reversals, but timing it is difficult. And the way that I do this is through this software called Prime Market Terminals, and I use COT data, which I talk about a lot. But something else that I actually use a lot is actually the research section right here, which is my favorite section of the software. I use this the most. It's my most used part of the software. I use this every day, about 3 to 4 hours. I just read. And what these research files are, they're basically like briefings or summaries or ideas that analysts from banks such as Barclays, UBS, Goldman Sachs, Wells Fargo, Deutsche, Bank of America, MUFG, JP Morgan, is basically insights that these guys send out. Some of them are morning briefings that they send to investors and clients. So a lot of these are not publicly available on the internet. Only if you're an investor with them or a client, you receive these. But with this software, you actually can read every single one of them. So this is actually really amazing. And I basically, because these guys are, as I said, banks, these are most of the times they are on the right side of the markets. So if you read all of these stuff, and a lot of time they don't even agree with each other, because like Bank of America, for example, they are very hawkish. Like they believe that rates are going to be higher in 2025. It's a similar thing for JP Morgan. They are very hawkish. They're saying that rates are going to be higher in 2025. And then you have other banks, I think it's Goldman Sachs, who believe that there's going to be cuts as the economy is going to slow, inflation is going to come down and all that stuff. So I mean, they have differences in opinion, so they're not always agreeing and so forth. But when you read all of these stuff, you can really get an idea. And I believe reading a diverse range of opinion is actually better for your trading. So you don't just read Goldman Sachs, because a lot of times Goldman Sachs may be biased or they only have a single perspective. But when you read from Wells Fargo, you read from UBS, Barclays, Bank of America, all of these different guys, you get a diverse range of perspective. which is actually good for your trading. And a lot of times I use this to get answers. Like sometimes I don't really understand what's happening in the market. Like yesterday I was confused as to why yields are going down. Even today yields are going down even further. And after reading these analysis, I think it was one from Goldman Sachs. So it was which one did I read? Yeah, it was this right here where I got some clarity on why yields were lower. And yields were lower because even though PPI rose, the core components that influence PCE actually fell. So this kind of reinforces an expectation that the PCE, which is the main inflation tool for the Fed, will actually fall. So only after reading this did I get that insight into inflation and understood what's happening in the yield markets and also why stocks are going up. So I mean, this tool right here is really amazing, especially if you're a trader. You just get a bunch of insights. So Society General, this is my save files. You can just look at this PDF and you can look at their opinions, what they're looking at in the FX markets and so forth. Another one of my favorite, you can also sort by institute, and I really like JP Morgan's analysis. I like their G10 FX daily. So this is a DEX trader that send their daily analysis on the markets, on the FX markets, and you can see that they just give their opinions on the pound, yen, Swiss franc, Australian dollar, Canadian dollar. So yeah, you can get a lot of insights from this, and that's one of my favorite tools. Another one that I like is the morning briefing by JP Morgan, which is this right here, where you get a lot of insights. And I actually got an amazing insight from this right here, which is this idea, which was a bull and bear case that they presented for the S&P. So they outlined a bull case. So they are saying that if we get strong macroeconomic data, the US continues to show resilience. If we get inflation cooling, if earnings remain positive, tariff wars do not escalate and all of these stuff, then this creates a bull case. And then they have a bear case. So if we see AI exhaustion, a correction in the Mag 7, if we see spike in bond yields or volatility, weaker consumer data or macroeconomic data, stretch positioning, and all those stuff, we may see the S&P bear. So this is an idea that I actually got from one of these morning briefings. So you get a lot of insights from this research files right here. And as I said, if you read all of this stuff, you will more than likely be on the right side of the markets most of the times, because these guys are banks, they're institutional traders, they have a lot of insights and access to softwares and so forth that we don't have. So this section of Prime Market Terminal is really insightful and helpful, and it helps you stay on the right side of the markets. But as I said, it's not a holy grail, because as a trader, you're trying to time the market, and timing the market is hard. So being on the right side alone is just not enough. And look at gold here. Gold is seeing some correction, which I am not sure why that is. I'll have to do some reading. Let me check the news section if it's updated. And this is another section that I read a lot too, the news section. So I'll see if there's any major news causing yeah, so there's no major news. This is probably just one of those regular moves in gold where we just see a huge correction or some huge selling. So yeah, that's kind of how I'm on the right side of the markets most of the time.